Investors and traders, welcome to the channel. In this video, we are going to take a look at the major currency pairs that we have been tracking for some time. And towards the end of the video, we'll also take a quick look at gold. So this video is for educational purposes only, and it is not a financial advice. This video is going to be a quick and short video. And what I recommend is at the end of this video, if you could please go and watch the video which I had done over the weekend, which is going to explain in more detail the patterns that we're talking about. And it will also give you an opportunity to actually see that the levels that we were looking at in majority of the currency pairs that we're going to take a look at, those have been met. That's why I'm doing a video right now to actually quickly go over those pattern formations. And I'm not going to go into the technical details of what those patterns are and how those levels were achieved. We'll just quickly go through those major currency pairs. So what we are looking at is the daily chart of the US dollar index futures. We don't or at least I don't trade this, but we look at this because there are a lot of fellows and institutions which actually watch this, and also perhaps they use it for hedging purposes as well. Okay, so guys, at the start of the week we had done a video, and in that we were looking for this level right here, highlighted in this shaded area, which is this level right around 101.87. So we were looking at about 101.87 as a potential area where this index could reach, and there is a possibility that the price could perhaps consolidate or even reverse from here, and we could have perhaps some rally going on in the US dollar. Closing, especially two consecutive closes below this level, means that actually we are looking at a bigger pattern, and this means that it's going to go and challenge the 100.74 level, and quite likely even take this level to the downside as well. So for now we are watching this pattern formation, which is in this shaded area. Just some stuff about the fundamentals kind of things. So today was the interest rate decision by the US Federal Reserve Bank. And if you remember the stock video which we had done yesterday, we were just discussing that there is a possibility for the Fed to raise 25 basis points, for its credibility, because of the rhetoric about the inflation and stuff like that. However, the stress in the financial system, especially in the banking sector, there's a possibility that they might not do as big a interest rate hike, or may even stop, and this might be the kind of one and done. So what the statement in the Jay Powell, the Fed chair, said in their speech is that Fed is raising 25 basis point, and for 2023 perhaps there might be one more interest rate hike. And they also gave kind of a target interest rate level where the Fed is actually going to keep the rates. And guys, in one of the questions which a reporter asked, this I found very interesting, because what the question was that, did the committee at any point discuss not raising the interest rate in this meeting? And the answer came from the Fed chair was they did discuss that. However, they still decided to increase the interest rate by 25 basis points. I believe that's personally because of the credibility of the Fed. But guys, what it means is that the chairman of the Federal Reserve is actually admitting there is something in the financial system, and raising the interest rates this cycle going further could actually put a lot more stress, and they had no idea what could come out of it. And in fact, they were surprised that what happened with the Silicon Valley Bank and how quickly it happened. An investigation needs to take place. So what it means is that this is just a hypothesis that we could see some rally in US dollar as a safe haven, and what we could see is some sell-off coming in risky assets such as stocks. Obviously this needs to be seen whether it happens or not. And the work which we do over here, we look at the pattern formations, we look at the technicals, but we also have to be mindful of some fundamentals, especially the interest rate hikes and what is the view of the Federal Reserve who actually make these interest rates. So guys, this is why we are watching this pattern really, really carefully, whether it's gonna make or break. If the dollar holds over here, then it could mean that perhaps there's money coming into the dollar as being the safe haven, and some of the risky assets could see some stress in them. All right, guys, so we're gonna move into the Euro USD here. So the Euro USD is the inverse of pretty much the inverse of the dollar index, and the reason is because I believe about 51% of the dollar index is Euro USD. So here we were looking at this level of, we were watching two levels actually at the start of the week. One was this, where we have this brown line around 108.35, and then the upper one was around 1 spot 09 2 around that region. So 1 spot 09, that's the region it reached. That was the 1.618 Fibonacci expansion. So guys, our kind of targets that we were watching for have been met. Now we have to really watch these levels really carefully as we were looking at the dollar index. If the dollar index collapses further, then obviously the Euro USD is going to move higher, and then it's going to go and challenge this 110 level. Let's quickly have a look at GBP USD. So GBP USD, we had identified this shaded area. It went right into it. The price closed below it. It's kind of consolidating here. However, if it begins to move downward from here, then it could mean that we have a lower high formation, and then it could perhaps go back into this zone we have been watching for around 116. Quite a while to go, but guys, we have seen these patterns, um, we have seen them hit, so maybe it might do that. Let's take a look at the USD JPY. This one is really, really interesting because guys, if you have been watching our video, we had identified this level of 136, this zone actually, which is the 38.2% Fibonacci retracement, 50% retracement right here. It went right to the 38.2% Fibonacci retracement, tried to move higher but couldn't go higher, and then it has moved lower. And where it is right now is right at the 61.8% Fibonacci retracement. We have to wait and see whether this level is going to hold or not. If it's going to hold, then this means there's going to be strength in the US dollar. So obviously the dollar index will strengthen, and we could see some higher prices. And if it breaks to the downside, then of course the level to watch is the 127.30 level right here, where it had formed a double bottom at the 50% retracement. So guys, just a quick video. This is what we are watching in the major US currency pairs. Let's also quickly take a look at the Aussie dollar. Okay guys, so the Aussie dollar, again, we had identified this brown line in advance when we did the analysis beginning of the week, at the weekend, and this is where it went and actually closed lower. So we are just watching what's gonna do. Maybe it's just gonna consolidate here. Gold, gold, gold. So let's take a look at the gold, and let's take a look at the gold futures. So guys, gold has been a really interesting. We had a target of 1900. It was met. Then we had a quite a nice decline, a pullback in this zone, and we just take a look at what this level was. So it was right around the 38.2% Fibonacci retracement, and now where it is actually what it did is from this level it also reached the 38.2% Fibonacci retracement around the 1938. So guys, I'm gonna mark this 1938 level right here. Actually, it's 1937 to be precise. Here we go, 1937 and a half. If we get a close below this level, then in my opinion what it means is that we had seen a high here, which was the second highest high after I believe that was the so that was the high so excuse me, this is the comics gold. So we had the all-time high back in August of 2020. This was the secondary high reached in March of 2022, so about a year ago. And it there is a possibility, in my opinion, that it could be another significant high reached, and we could go lower, a lot lower actually in gold. Um, so this is what we are watching. The level is 1937 and a half. We'll be watching this really carefully, and that will mean we have put in some sort of a high in gold. So guys, this is what we're watching. If you like our videos, how we look at these markets, how we look at the pattern recognition, how we use Fibonacci retracements to work out key levels, then please do subscribe to the channel. If you like the video, then please do click like. It just tells me that people find the videos educational and I like watching them. It just encourages me to keep on producing more and more videos for educational purposes for you guys. Good luck and good trading.